We are here on this amazing day. Everyone, this is Cam Jones, FX Daily Analysis. Disclaimer, I am not a professional. Please watch these videos at your own risk. These videos are for entertainment purposes only. Thank you. Friends and family on Discord and Telegram. Families and friends will prosper. Let's get back down to business. Alright guys, we back up. Let's check this out. So we are on... the time is 1:50 p.m. Today's date is January 20th, 2021. The pair we'll be working on is USD versus JPY. That is the United States dollar versus the Japanese yen. So let's mark up UJ to see what's going on in the market for the past few years. And so we can figure out what is going on current time. We're going to grab our brush. So we can see in this area, this is where the market started off at. And the first thing it kind of did was it pushed straight down. So once it pushed down, it created a strong support, as we can see here. Then the market pushed up, came back down for a retest to break up further. And this is the area where it reaches higher highs. So we have where market started off at, we have a lowest low area, and then we have a area where it reached the highest highs. The market came back down, so we can see that it created a head and shoulders pattern. So if you go to Google and you type in Forex patterns, head and shoulders, you will see this pattern, something similar to this. Sometimes the right side may be a little higher, or the left side may be a little higher, and that and this, but overall it's a head and shoulders pattern. The market was in some type of range here, so it consolidated for a little bit before it broke back up, tried to reach areas of higher highs again, but it wasn't able to reach the previous area higher highs. So it shortened itself just a bit, so it created another area of strong resistance. The market pushed back down, pushed down further, bounced around in here back to that consolidation area from where it started off at. So we have this area where it's currently at, and then the market pushed up further, came back down, tried to push up higher to break previous areas, which it did, and then the market tried to reach areas of higher highs of previous years, but it wasn't able to. So if it can't go up, only way it can do is the market can go down, which it did. The market came down, pushed back down, came back up, tried to retest something in this area to push down further, came back up to retest something in this area to push down further, came back up to retest something in this area to push down further, and now we can see that the market has hit another area of major support, which would be right here. So it kind of matches up with this area here, not to a T, but close enough, you know. So the market shows that the market is back to the bottom of a strong support. Then the market did a few things in here. Look like I see a W formation here, so I'll try to draw that out for you guys. So I just see a W formation there. We see a retest, and the market broke up, and it actually broke up and broke out to push up again and push up for the third time. So once the market pushed up for the third time in this area here, it created another area of strong resistance. So the strong resistance area right here wasn't able to break, so if it can't go up anymore, the market's going to go back down, which it did. It actually did a hard drop back into this area here, create another area of support, and then the market went back up, and it kind of consolidated into a downtrend, as we can see here. So we have our little downtrend here. This area here is where the current price is, and this is where the support is. So if we can see that our candle bodies is trying to slowly come back down to reach areas of support, which we can see is almost there. So once it breaks this support, it will be headed down to the next area of support, which will be here. So we'll match that line up, and let's say if it doesn't break out and it decides to touch it to come right back up, then we do know, or we have an idea, that the market would be trying to reach back up to higher highs. So it's either two ways the market's going to go in this area. Either it's going to break down to this line here, or it's going to break up to the next line here, or the market can just bounce around in here for the next few months 2 years. So it all varies, you know. That was a monthly time frame of UJ. So I'm going to clear this out. I'm going to erase our drawings. And what we're going to do is, let's take a look at this area here, because we do know that this area is what we're dealing with. So let's say about here. I'm going to stretch this out. Okay, so we're just going to be dealing with the last few months of UJ. Let's create a few. So we do know our overall trend for this current market is the downtrend. So let's create a downtrend. So the market's pushing down, and let's say we put that in red. And then what we can do next is that we just grab our ray, horizontal ray, or a horizontal line, doesn't matter. And we know that if the market came down, it's trying to reach this low area here. So we can do an SR line here. And let's say we do one for the top. If the market doesn't break up and break higher, it will be headed back up to this area here. So it's either going to hit this orange and bounce up, or break through, or hit this orange and tap this orange and go straight up. And let's say if it goes down, this will be the area here. The furthest it will go down could be somewhere here. So we're going to go down a time frame. We're going to see what happens if the market breaks up or break out. What I want to do is I'm going to grab this downtrend line, and I'm going to put it a lot closer to where price action is. And some things may be overlapping, but right now, if I need to tighten it up, I'll tighten up down the time frame. But I'm putting it right here, right where price action is, right on that body of that candle. So when we go down the time frame, we have to do too much adjusting. Each his own. So let's go to weekly time frame. Let's take a look at what we're looking at, and we can see that it layered it just a little bit, which is fine. What I gotta do is tighten it up a little bit, put it right on top. By the end of the day, the market is trying to head back to this our orange horizontal ray. So what we're going to do next is, let's see if we keep on riding the market down, how many pips we are able to take, because it is currently in a downtrend. If it breaks that downtrend, or break your trade, or hit your stop loss, and we go all jump out our trades to figure out the next direction the market is going to go in. But for right now, we do see that market's in a downtrend, so we're going to see if we can find entry on that downtrend. If we go to the daily and we take a look at what the market is doing, we can see that it's riding that downtrend. So it's riding. And as long as they keep riding that downtrend, we can keep on taking it all the way down until it reaches our orange line. If I come over this way, so we're on the daily. So there's certain areas you may want to watch out for, because it may not be able to break. So I'm going to mark this up. I really don't mark up on the daily too much, but I will today. So we can see that it was a huge push down somewhere here. Okay, so with that push down being here, so the market may not pass this area here. The market may not push past this area here. So what I'm going to do is I'm going to do a horizontal line right below where that spike is, or you can put it at the body, you know, whatever you feel. But for right now, let's just go with the bottom of the wick. So we saying that price is going to reach this bottom of the wick, and if it breaks this, it's going to go down further. If I go to the 4 hour, we can see a closer look of the market. So with the 4 hour, we can see that the market has reached back up into our trend line. So it didn't break our trend line, which is good. So it's following the trend for now until it breaks it. So that's still in the downtrend. So we gotta look for some type of entry. So once we see entry confirmation, like if you see here, we see that the market, it's like, let's call this for right now, let's call it a big consolidation. So the market broke up into a consolidation area, created, it touched areas highest highs, bounced around up and down, retested previous second levels, previous areas of highest highs, to come back down, to bounce around, to push up again, to retest second areas highest highs again for the third time, or the second retest, to come back down. And now we're trying to figure out, okay, what is the market doing in this area here? So we basically looking for this area for the 4 hour. We're looking for a break, either a break to the upside or a break to the downside. So I'm gonna clear my screen once again. I think I cleared off too much. Let's go back. Okay, so on a 4 hour, let's say, you know, we see that this area is like some type of huge consolidation, which we in a downtrend. So we actually waiting for the market to break this area here. So we had to put as a resistance and support on this consolidation. We can place one here, and we can place one about here. So we can see that, okay, if the market breaks lower than this, we can spike this up a little higher, because we probably want a full body candle to pop out here to see that it's going to go down. So once the market is in this, breaks this consolidation, then we'll either take it down further to the next level, and then on a 4 hour, it look like the next level will be somewhere here. So in this area, if it breaks through, it'll come down further here. If it goes, now there's a chance that the market can go up. So the market can actually, you know, bounce around in here, up, down, consolidation, another up, another down. And let's say we have a engulfing pattern that happens where the green candle engulfs over this red one. And let's say it comes up over this one. That will be clear entry for us to take a trade up into this area to come back down. But at the end of the day, the overall trend is down. So if you're not experienced, then you may not want to go against the trend. You may want to wait until the trend breaks this area of support, because we know the overall trend is a downtrend. So if the overall trend is downtrend, then you're not experienced with the market yet, just go with the trend. If it takes days and weeks and months or years or hours, and the market's trying to rally back up, and you can sit here and say, you know what, this is going to take some days, or it's going to take a long time, or it take a short period of time. It all depends on the market. We don't have to stick around for this. You know, if it goes going up and we looking for down sales, then, you know, we'll just get in that trade when we see confirmation of, let me clear this out. If we see confirmation of the market, let's say we have another red candle that comes down and it breaks through our support, and then the next body candle and wick is outside of this, then that will be clear signals that, okay, you know what, the market is going down, so let's jump in our trade somewhere in this area here so we can ride this down to the bottom of our next support. So let's say if we found entry here and we wrote it straight down in here, let's take a look at how many pips we can be looking at. Let's say you grab our short position, find entry somewhere here, and we'll be able to. So if we go on for the downtrend, we got to set a TP, which will be the target, and we'll take it to the next level. I mean, we'll take it to our next orange line of support, and that will give us an estimate of 77.9 pips. If the market was, you know, for us to set a security for us for if the market turns around and go in the opposite direction. All we have to do is create a stop loss of a few pips. So entries here, you can take to the next level up, which would be here. That'll be like 28 pips. But for this market, I wouldn't say for this market, for the market period, for going back up into this area here may not be enough of a stop loss. We may have to bring it up further. So let's say if you want to have more security, and if you know the pair that you're dealing with, you can place it here. But if you want more security, okay, you know what? I'm not too sure if the market's going to push back further. I'm not too familiar about this pair of USD JPY. Then you can pull out stop loss to create more security and place it somewhere here. So I'll give us a total of, if the trade go against us, the market will only go against us about 51 pips. And if we are in the trade and is in our direction, we in the market can and will hit our TP, that'll be 77 pips going down. So that'll be a 77 on the way down. If it goes back against our trend, that's 51 on the loss. Okay, so it ain't nothing wrong with losses sometimes. So you guys, if you in the market and it hit the stop losses, and it, you know, just go to your charts, figure out why it hit the stop loss. Maybe it's just retesting something. Sometimes you have candles sometimes, you know, overall tries to come down. It may come back up for a retest to break down further, to come back up for another retest to break down further. And then sometimes you may have them wicks that be sitting in these on these bodies that be you know, it be long. So I'm gonna just change the color right here, show you an example. Sometimes the wicks of the bodies, I ain't gonna change that color, but so sometimes with these bodies, we may have candles that are that has these long wicks. So if we set our stop loss, let's say here, and move this over, show you guys the example of what I mean. So if we was trying to find entry here, and let's say we set our stop loss here, and you know, the market's looking good, is in our favor, it's going down, but then it comes back up to retest to go down further. But let's say sometimes in this area here, we may have that one candle that has that long wick, and the wick sometimes be so long that it pushes the market all the way back up, and it'll stop us out of our trade, which is fine, because all we have to do is look to see why we got stopped out and get back in entry if we can, and ride it right back down. So sometimes when you get stopped out your trade, and you may take a loss for the moment, you can sometimes get right back in your trade within the next hour, 30 minutes, 5 minutes, 10 minutes, 4 hours. You know, it all depends on what the market is doing. But please do not be discouraged if you do get knocked out the market. Just try to find out what happened, identify what's happening in the market, identify why you got knocked out in the market, and identify, okay, where do I need to get back in the market? Okay, so about 51 pips. Alright, so let's take a look at, so that was UJ, and we're looking for the market to go break down further for 77 pips. If the market goes up, we will not chase the market going in the opposite direction, because the overall direction trend is down. So guys, I want to pull up the Forex pattern sheets for you. We're going to go over a few patterns. So these are reversal chart patterns on the cheat sheets. So let's see what we got here. We have a bearish double top. So bearish meaning down. So there is a downtrend. So the market came up from somewhere. It reached areas of highest highs. It came back down to retest the area to go back up further to reach high highs again. So it probably was trying to break out, wasn't able to, and it broke right back down, and it actually went into the opposite direction. So when you see things like a double top, once it gets to this area here and you don't see the market pushes up to create that W formation, that means the market's going to probably go down. And what formation will we look like we see here? We see a double top. In other words, a W for an M formation. So, you know, with me playing in the market so much, when you see M's meaning that the market is going down. When you see W's, that means the market is going up. So W's are wins, M's are, you can say, losses. Let's take a look at the bearish head and shoulders. I think we just had the bearish we just seen a head and shoulders pattern on the UJ on the monthly, and what that is, the market coming up from somewhere, it came back down for a retest, it pushed up higher to first level of resistance, to come back down to retest some areas again that the market was previously at, to come back up for another retest, but it wasn't able to break up further. So the market just said, you know what, we're just going to go straight down, and that's when we see that triple top. So that would be the bearish head and shoulders. So we see this will be the left shoulder, this will be the head, and this will be the right shoulder. It looks real pretty when you're looking at a cheat sheet, a pattern sheet, but when you're in the market, it doesn't look like this to a T. The shoulders will not line up, the head will not line up. Sometimes the head is close to the shoulders. Sometimes when you see that, people say, you know, everybody got their own opinions about the market, that if you see the head, the left shoulder matched up the head, the close to the top shoulder and the right shoulder, that means that the market's probably going to go, and good morning, the market's going to probably move and do what it do. So at the end of the day, if we keep on marking, if we keep marking up, paying attention to the market, we'll understand, you know, what's the next move. For you beginners traders, if I could drop some jewels on you guys, Forex 101 information. If you're in Forex, if you're trading, and you trying to or wanting to get to understand the market and what you see in the market, pull up TradingView. Go to tradingview.com. Follow some of my pairs that I marked up. It could be UJ, it could be AJ, it could be AC, it could be anything. Put some pairs down. You can put it on a 4-hour time frame. You can put it on a 1-hour time frame. You can put it on a 30-minute time frame. Check back every 4 hours. Check back every 2 hours. Check back every 1 hour. Check back every 30 minutes. Even if it's on a daily. You know, if you have a busy schedule, that don't mean that you can't trade and make extra cash flow for yourself, extra income for yourself. On the UJ, let's say for the daily, you can just look at it every 24 hours, and that will be what the market will open up on the daily at 5 p.m. It will close out on the daily at 5 p.m. the next 24 hours. So, you know, any way you can, just keep your eyes on the market for a long period of time, short period of time. You'll be able to understand the market. You know, the way I like to break down to people is, if you watch the market like you watch TV, and that can be being in the market for a long period of time, being in the market for a short period of time, but get yourself in the market, get to know what you're seeing, look for the patterns, look for the W formations, look for the M formations, and then from there, you know, you can be a great trader as well. Thank God. Okay, everyone, this is Cam Jones, FX Daily Analysis. Thank you for watching.